Hey, Doc. This is Dr. Greg McLeod from Elite Traders University, and we have our edition of Bulls versus Bears. Bulls versus Bears, we're going to be forecasting the movements of the market. I'm going to be looking at technical levels as well as economic indicators, which can help us better trade the market for the upcoming week, for this week starting November 3rd, 2024. We have election uh, results that maybe people are waiting and anticipating the election. That's going to create a lot of volatility in the market. We also had non-farm payroll, which came out the worst that's ever been and since the pandemic. 12,000 new jobs were actually created versus 115,000 that were anticipated. So just 12,000 jobs. Now, remember, you got to take an account that we have the Boeing strike. We have a lot of layoffs going on at different companies contributing to the dismal non-farm payroll number. So in this Bills versus Bears, we're going to see how we can trade the major currency pairs. We're also going to look at some futures. We're going to look at YMES, look at the NASDAQ NQ, and we'll take a look at that. So let's go right to the charts and go to Bulls versus Bears, the weekly Forex forecast. Okay, I'm going to share my screen and let's get it going. And here we go. We're going to Trading View. Trading View charts are very good for giving us a overall picture of the market. We're going to be looking at daily charts, walking it down to using multiple time frame analysis. I usually start with the U.S. dollar index. The U.S. dollar index is a basket of currencies versus the U.S. dollar, and it's the driver's seat where it comes to financial markets. We want to look at the U.S. dollar index before we even do any type of analysis on any other um, in any other financial instrument. The U.S. dollar is the reserve currency of the world, and so therefore it's important for us to take the pulse of the overall global economy through the movements of the U.S. dollar. Okay, and we're going to share our screen. Here we go. Here we go. Share. Sharing is caring. And here we go. Share. And we'll share. And advanced. And they, wow, they updated or upgraded our wonderful. They made everything new on Zoom. And let's there we go. I guess we're just gonna do share the screen, right? Keep it simple. Okay, so here's the US dollar index. Move myself out of the way. And this is a weekly chart of the US dollar index. And you can see in the structure we had higher highs and higher lows. We hit a high of 114.79 with a pullback down to the 99.66 area. And we have a double bottom pattern. Double bottom is a very popular technical analysis pattern, one of 48,000 patterns covered by Thomas Bulkowski in his book, Encyclopedia of Chart Patterns. And what it really shows us is that the bears are exhausted. They tried to take the dollar southbound, but then they got to a level, got this 100.41 area, the 100 area, and you can see that we also tested that area back uh, back in July of 2023 or so. Yeah, July 3rd. And then we retested again recently on September 23rd, 2024. After a this bullish rejection, we see the bulls in firm control of the market. And that's why we've seen we've seen some really sharp drops in the pound US dollar exchange rate as well as the euro exchange rate as well. And we also have seen some exceedingly uh, uh, increases in the dollar yen rate. So we have on a medium term, we have because everything's priced in dollars. Wherever you would buy a gallon of gas or a gallon of milk, you're exchanging U.S. dollars for milk, exchanging U.S. dollars for rent or for gas, or for stock, or for oil, or for natural gas. The US dollar is what you exchange. It's the Chuck E. Cheese token that allows you to play the game, right? And so when we see the dollar going up, people are holding on to those tokens. And so other assets start going down. We see Bitcoin falling. We see the stock market having some steep declines. We had a rally on Friday, but a rally on Friday on low volume, on basically on some news, the worsening job numbers uh, in the US only could indicate that we could still go back to trend following on Tuesday. And after the election, we could see that maybe the Fed does not raise, but does not cut rates, but keeps rates unchanged. And when they keep rates unchanged, it's the same as having a rate hike, right? And that's why the dollar is moving up from these levels. A weekly trend change is a very powerful trend change. A daily chart, we can see maybe a little bit of a pullback at the 200 simple moving average. The 200 simple moving average is one of the most widely watched technical indicators. And we can see that when price is below the 200 simple moving average, it's bearish. And when price is above the 200 simple moving average, it is bullish. Okay. So bulls versus bears, I am bullish the US dollar for a continuing move, maybe from the current level of the 104 spot oh 05 area to 106 spot 18. Okay. So let's go ahead and take a look at the anti-dollar, which is the euro, EUR-USD. Okay. And this is the euro versus US dollar exchange rate. We'll start with our weekly chart, and we can see that we had it's called the anti-dollar because it usually moves in the opposite direction of the US dollar. So instead of a double bottom or W pattern, which we saw in the dollar exchange, the dollar basket, the DXY, the euro has a double top or an M pattern. And you can see the M being formed where price rallied. Similarly, July of 2023, we got to a high at one spot 1254, and we retested again September 23rd at one spot 1245. So we got a double top rejection at the 200 system moving average. We anticipate the euro to continue to fall, maybe back down to the one spot 0523 area, and so we would be constructively bearish the euro dollar, or we'll be buying dollars and shorting euro, benefiting from the depreciation in the value of the euro versus the US dollar. Okay. Now, there's about very powerful people in the markets and in the elections and things like that, and they already kind of know where all this stuff is going to happen. They know who's going to win. They know who's going to lose. They know how much money is going to be made. They are part of a inner sanctum of people who already know what's going to happen. And so you can, be very, stick your head in the sand and be very, optimistic of the way we live in a democracy, but really everything's already pre-planned, and we're just kind of like watching the chess game be played. Okay. All right. So let's take a look at now the other alternative count that I also see, because this, we've got this flat, it almost looks like a flat flag, almost a high and tight bull flag. So there is a bullish where this could be bullish if we break above one spot 1237. We break above that, then we have a wide open spaces up to one spot 2241 and beyond the old highs back in May of 2021. So this high and tight bull flag, that is the alternative pattern which I'm seeing. If we fail to make a new low, because we still have a rising uptrend that has not been violated yet, right? Even though we are making these lows, we do have a rising uptrend that has been challenged. And we would, in order for it to really be confirmed structurally, we need a break below one spot 0656. And even really, all these lows have to be taken out. The low of April 15th, tax day, 2024, one spot 0602 has to be broken. And then we have a further low at one spot 0436, the low of September 5th, 2024. We can see that break. We could see a reversal and a further downward move toward the ultimate low back in September of 2022, which would take us down to 0 spot 9565. Okay. So that is the alternative of the bearish scenario. The bullish scenario based on um on seasonalities is that usually usually the euro rallies in the fall, right? And that is the one possibility there that so this is kind of a mixed bag. We're kind of moving sideways, indecision because we have the election coming up, and market players who are not super in the know, maybe on the sidelines because they are not sure, right? Seasonalities and this higher trend line really indicate a move to the upside. We might get a relief rally once the election is passed and the president is elected. Then we would see a move higher in the euro. But right now, higher lows, we could see a break above 1.100, and we could see prices move dramatic. As already we see, if you look at the daily chart, we have a turn. The turn happened on September 25th, 2024. Okay, so again, I would be constructively bullish above 1.09. Oh, the 1.100, which is a whole number, round number resistance area. If we can break that trend line, then smooth sailing back up to 1.122, and we could see further appreciation to the 1.200 area in line with a Fed rate cut, in line with a weaker dollar and a higher euro. Okay, so those are the two major currencies I'll look at, but I'm going to look at some other things. We're going to look at the S&P 500 for those people who are looking at the futures, right? And I'm just going to use a CFD because it's easier for me. Remember, I'm a Forex guy, and the reason why I trade Forex is a 24-hour, true 24-hour market, 5.5 days a week. I start trading on Asia, which is about 9 p.m. my time. I place a couple of trades and I go to bed, as opposed because I'm not going to wake up for New York session. I'm sorry. I'm not going to wake up to trade this. But some of the guys in YouTube, I want to do a big shout out to you guys who've been asking me about the Mustang. Well, the guy by the name Mustang, he reached out to me on Twitter and said, "Hey, Greg, why don't you cover some of the futures?" So I'm going to do that for you because you asked. Okay, so futures, we got higher highs and higher lows. This is an uptrend, guys. You can see structurally higher highs, higher lows. This is an uptrend. You would be um, nuts to try to short this for any length of time. I mean, and people try to pick tops and bottoms, and the old saying, "He who picks bottoms has a smelly finger." Okay, it's an old trader joke. Haha. I'm full of them. Right? If you want to learn those and much more, click the link below and sign up for a free strategy call by Profit Acceleration Call. Learn how I can help you in your trading, if I can help you, and if I can't, I can tell you how I can work with you and help you become more profitable over time. Okay, anyway, moving right along. It's higher highs and higher lows, guys. So we've got a low. We hit a high. We hit the all-time high that the S&P 500 has ever been, 5,886.23 all-time high in the S&P 500. And there's another saying in Wall Street saying, "Don't fight the Fed." The Fed sets the interest rate. The Federal Open Market Committee, or FMOC, is the United States Central Bank, and they set the rates. They print the funny money, guys. And if they print a lot of money, like they did back in COVID days, remember COVID days? Everybody getting the checks, everybody getting paid, whoop, whoop, right? They're getting paid, right? Well, guess what? They're cutting rates again because when you create 12,000 jobs for the entire country, it doesn't look too good, right? That's like you and your cousin and maybe some people down the street got a job, but the rest of the country's unemployed, right? So that's bad. That's really bad. And when things are bad, then the FOMC steps in and cuts rates, right? So we don't know, did they make the bad number? Because you go from 145 or 245,000 jobs down to 12,000. And remember, non-farm payroll numbers have been kind of screwy lately, right? Remember, I told you the forecast. I showed you the forecast based on AI that were showing back in February that showed we had negative job growth going into the fourth quarter. But they keep saying, "Hey, we create all these jobs." But that's not what the forecasts are saying, right? And they're trying to say, well, it's because of you know, people working multiple jobs, and maybe people quitting some of those jobs, and there are all kinds of excuses why the job numbers are funny, but we all know that that we're living in an era where things are not as they seem, right? Like so things and so by saying certain things, they can manipulate monetary policy by creating certain news, right? Like before, it was like there's not going to be a rate cut because you can't cut rates when job because rates, interest rates, and jobs are they are opposite. They're negatively correlated, right? Higher rates mean we need to have lower employment because that will give us cover to cut rates. If you cut rates of high employment, you create more inflation. More people have jobs, more people can buy stuff. More people buy stuff, there's less stuff to buy, and prices go up. So you have to raise rates to lower job growth because if everybody's broke and don't have a job, they can't buy stuff. And that way, guess what? Inflation goes down. Why? Because now you can't sell to broke people because you don't get any customers. They don't have jobs. They can't buy your stuff. You have to lower your prices in order to sell your stuff. Okay. So thinking that we can have interest rates cuts and increasing job growth at the same time is a fantasy. The soft landing is a myth. Okay. Anyway, let me get off my soapbox and get back to the analysis. Okay. But if you have something to say about it, let me know. If you disagree with me, put it in the comments below and say, Greg, you're full of BS, bro. It's not like that. Then tell me why. Tell me why at the bottom. Or if you agree with me, say you agree with me. Or if you disagree with me, say you disagree. Give me a thumbs down, okay? If you don't agree, okay? Anyway, here we go. Daily 4-hour chart. And you can see we're bottoming out, right? We got some buyers stepping in here. The S&P is, this is a bargain right now. You want to buy the dip. You want to buy when there's blood in the street. And guess what? This is blood. And these are the guys stepping in on that. And they know that whoever is president, it's the fourth quarter, guys. It's just like trading places. Eddie Murphy says the traders they can't get no honey if they don't make no money, and then they gotta buy their kid that GI Joe with the Kung Fu grip, right? So guess what? Things have to go up because people got to get paid the fourth quarter bonuses. They gotta get the bonus. They got to get the bonus check, the Christmas bonus. Okay, this is not Tiny Tim. This is not the Christmas story, right? With Bob Cratchit and crap like that. This is these guys get their they lowball third quarter earnings to bring everything down, and then they bust up with a beat on the fourth quarter earnings, and then guess what? All the stocks go up, and everybody gets paid. It happens every November. Typically, November is the strongest time of the market for the market to move. And guess what? They are not going to not get their checks because of some economic data. They're not going to let the facts get in the way of a good story. Okay, so I'm bullish. S&P 500. I am long and strong the S&P 500. We're at 57, 44.84, and I look for prices to return back to the 58.60 and beyond. Okay. We already did an ABC correction, three-wave correction against the trend. We are also at a Fibonacci level too on the 4-hour chart. 4-hour charts are called dealer charts, and we have just missed the 38% retracement down at 55,686 spot 53, and we're turning already against the 200. And once we break above that 200, 57.77, we got a move back up to the old high. So I'm bullish S&P 500. Let's look at what's it, YM, the mini Dow. Okay, same thing's happening there. But let's go down to here's the weekly chart. There and you see every time we've got a sharp push down, we had a pull back up. In fact, this is probably your bargain opportunity. In fact, I'm not recommending any stock, but my daughter, she texts me. She goes, "It's about time yet." She knows she's been raised with me. She's been trading stocks since she was, or trading, trading, looking at the market since she was 6 years old. And she goes, "Daddy, is it time yet?" I go, "Yeah, honey, it's that time again." My other daughter, twin daughter, she's on Amazon and she's up 40%, which is pretty good for being. So she's 22 now. but it's pretty good because they understand the major cycles, right? And that is so cool. I had a friend or at the brokerage, his name is Matt, and his dad was a broker, a stock trader. It's like, and he's like a third generation, my dad, he was a hard worker, he was a butcher. He worked hard, he worked, in fact, I won the union essay contest, and this the guy, he was like a German guy, and he goes up, your dad's the best darn boner in all LA. And I'm like, everyone's like looking at this guy, But my dad would act, he got paid piece rate for deboning beef. He had these sharp knives, and he would look like Freddy Krueger. He had all these knives he would sharpen every night at night, and then we go to work. He would bone. I mean, he would just for all it was piece. You got paid piece rate. The more you boned, the more you deboned, the more money you made, right? So the boss walked over to me and goes, "Your dad's the best darn boner in all of LA." And I'm like, and everyone's like going, "Your dad is like so cool." It's like, Anyway, if you don't know what I mean, don't bother. It's not worth repeating again anyway. So here's the daily chart of the E-mini Dow futures. We see we have higher swing highs and higher swing lows. We're above the 200 moving average. We do have an uptrend. Yes, it's been broken, but structure has not been broken because we need to see lower swing lows and lower swing highs for a reversal, which would create like a head and shoulders pattern, which means we would need to test near the new high again and then drop. But instead, we're coming back to the old area of support, 42,010, right? We're bouncing off that area. I suspect that we might move sideways on Monday. I see a breakout to new highs. We break this trend line at 42,390. We could see new highs 43,481 and beyond. Again, there's many people that teach, oh, sold the breakout. Yeah, you can. Um, and you can make some good money here, but the trend is up, guys. The higher time for this trend is up, right? So we want to buy low, sell high, right? Do like Snoop Dogg, but sell high, right? Don't get high for real, But when the price gets back to the old high, but you take profit, but you want to buy low, sell high, right? And all the equities are functioning in the same way because all these guys who trade these things want to get paid for Christmas and get that Christmas bonus, right? So this is a seasonal effect. If you look back at November, I think we've rallied every November except for one. It was like 2021. See, the seasonalities are in effect, right? We have major seasonalities. I think let me go ahead and maybe show you a seasonal chart that's on the Bloomberg terminal. Seasonality. Yeah, here we go. So this is a seasonal from 2021 to 2024. You can see what the worst months in the year for the S&P 500. But you can see that typically we had 2021 was the worst November we had. But look, November 2020 up 10.75%, 22 up 5.38%, 23 up 8.92%, and 2024, it's we're starting right now, right? We're very early in November, but based on past seasonalities, November is typically the strongest. We get these very big gains toward the end of November, right? So we look maybe between the highest we had was a 10.75 increase, and the lowest we had was 5.38. So between 10 and 5% rally in the S&P 500 is what we're looking at for November. So statistically, we need to be long looking for, and yeah, you could scalp and short-term trade to the south side, but I want to be with the river. I want to move with the market, right? Dropping down to a 4-hour chart. I'm looking down we a pullback to 43.89. We go back a little bit farther, go to a 2-hour where we're starting a nice little, we get a nice little entry, we're getting a little pullback and maybe an entry above 42,385, and it's on and cracking, right? Especially as we get closer to the election day. Okay. Let's look at NQ NASDAQ, and we'll finish off with that. We'll take a look at gold. And let's take a look at NQ. start with that weekly, where I start the weekly, and sometimes I go out to the monthly and see, what's going on. But the monthly chart's not going to change. We're in that big bar and on the monthly chart, and you can see we're stacking higher highs and higher lows, and almost a parabolic move. Some people think, oh wow, they see this, they think it can't go much higher. Don't be a hero. Don't fight the Fed. If the Fed is printing money and cutting interest rates, the market will continue to go higher, okay? Because that money is floating around and is losing value, okay? Because it's like dirt. Why is dirt, there's something called dirt cheap? Because there's so much of dirt, right? But gold, there's not much gold, right? Gold is very expensive because there's not that much of it. So when the Fed starts printing money by lowering interest rates, you have a bunch of cheap money. So you're losing value. So what you're gonna buy stocks, you're gonna buy real estate, you're gonna buy art or classic cars, you're gonna buy physical real assets, you're even gonna buy digital products, like you're gonna buy Bitcoin or Ethereum. You're gonna buy risky assets with these depreciated dollars. Because if you hold cash, you're losing. If they're cutting rates, the dollar loses its value. So it's very important for you, to understand the way the market works. It's working on supply and demand. An increase of supply of dollars means a decreased value of the dollar, and everything else goes higher, right? So this is NQ on the monthly chart, drop down to weekly chart, higher highs and higher lows. This is the structure, guys. We're making every low, we're making a higher high. Every low, we're making a higher high. And we had a really severe low and retested the 17,180 area, spot 50. Old high, people are going to say, it's a double top at 21,046. And the double top people are going to get screwed. They're going to get crushed because they're going to bet against the Fed, and they'll make a little money, little pullback, and then boom, you're going to see a breakout in high volume, and those guys are going to get wiped out. They're going to get washed out of the market. And you're going to see maybe an extended move to 22,000, right? Again, we're at all-time highs, but this people don't get suckered in to this is a double top pattern. The market doesn't care about a double top pattern. It's like going, all right, yeah, double top this, bam, in your face, brother. You know, here's your double top, right? Again, you pick tops and bottoms, you're gonna get a smelly, sticky finger, right? So I would look for, I'm not gonna run in front of it. I'm not gonna be a hero, but if I get a break of maybe 20,340, I'm looking for a move higher, right? Because they're gonna suck people into like shorting the market on this double top nonsense there. They're supported at 19,843. We might get a wick down there, but I'm looking at any drop as a buying opportunity. Walking down to the 4-hour chart, we can probably, if you're already seeing a turn, right? But I would say we might get one more drop, one more push in A, B, C, let that third wave complete. And on that third wave completing, then I'm giving you all the secrets of pip and run. Let me be quiet right now. Let me go ahead and cut this off. But if you really are like what we've been talking about so far, go ahead and book a strategy call. Click the link below for the profit acceleration call, and I'll show you what we do and how we do it. And I'll give you a compound blueprint plan that you can put in your own to work in your own trading. And I'm sure that 30 minutes talking with me, your trading is going to be a lot better than you being by yourself, DIYing it for years and years and years and not making any money, right? But you can talk to me, a 30-year Wall Street insider currency strategist, like, man, and I'm not going to charge you anything for it. And then your trading is probably going to be a lot better, but you're going to be better for it anyway for talking with me. Now, if you want to work with me for an ongoing basis and you like what you heard, then ask me and I'll see if you're a perfect fit, see if you're a right fit, see if I can even help you, right? Seeing if we can work with each other, okay? Again, the profit acceleration call is absolutely free. Click the link. Spots are limited and are running out. Okay, so I'll look forward to seeing you. Let's go ahead and take a look at gold, XAUUSD. I'm looking at the spot, and the spot's going to be much different from the future, right? And we can see as the dollar's been increasing in value, gold took a little bit of a pullback, but look at this weekly time frame, stacking parabolic move, And you're going to find some heroes out there. They're going to run in front of this truck and try to short it, and they're going to get crushed, right? Um, the trend is your friend till it ends, and it ends with a structure change. And also, I'll give you another key, and I really shouldn't give it to you, but I love you guys. I know the guys who spent, in my mentorship, my masterminds that spent $20,000, $30,000 with me. It's like, shut up, Greg, shut up, don't tell him. I'm going to tell him. I'm going to tell him. This is it. Get a piece of paper, get a pen. You don't know what a pen and a paper is? You can't hack. You know what was great about paper? You can't hack paper, right? They can hack a wallet, they can hack your email, but you write it down on a piece of paper, they can't hack that, okay? And they can't hack your brain either. Not yet, anyway. Anyway, a change of momentum precedes a change in price. A change of momentum precedes the change in price. Now, stick that into your pipe and smoke it. Okay, moving along. What does he mean by that? Well, get on the profit acceleration call, you lazy bum, and I'll tell you, right? I'm not gonna give you all the secrets of the kingdom here, I gotta save something for the profit acceleration call. But here it is: structure, higher highs and higher lows. And my candles don't look like yours because I have special candles. Okay, I got birthday candles, baby. Okay, and they light up, right? They illuminate the trend direction very easily, very simply. Forget I have a video. Dump Japanese candlesticks. They suck. I've got these. I'll tell you about them on the profit acceleration call. Higher highs and higher lows on a daily chart of gold, right? So this is just a minor pullback. This is a discount, guys. You love discounts, right? You look at the discount, you're looking for coupons. You're a coupon clipper. You get hey, I got the discount. Can I get 10% off? This is your coupon. This is your coupon, right? Anytime you see red candles, it's a coupon, a discount. And guess what? If you bought on right here, your stop ain't going to get hit. And guess what? When this thing changes from red to green, guess what? You're going to make a lot of money, okay? Theoretically. You could. I got to say it because I got to be compliant, I'm not going to be all hypey and say you're going to get a Lambo and a big house and, and diamond-studded grills. No, this is, it's all based on probabilities, and it could possibly blow up in your face, right? You can risk any and lose all of your money on these markets, right? But it helps to have a plan, because if you fail to plan, you plan to fail, right? So here we go. We got a nice little ABC correction, a three-wave correction against the trend after being at a high of 27.89 or so, and we're making like a double bottom at the 27.35. Let me go ahead and zoom this out for you, just in case you've got you're wearing glasses or you got that jitterbug phone and you really can't see the numbers. Let me make it super big for you, and here we go. All right, this is gonna be my last thing. I'll put Bitcoin on there for you. Or actually, we save it for next time. But there's your double bottom there, 27.50 36, and we probably look for a bounce from there and a retest of the high at 27.87. And let me know what you think, and post it in the comment section below. And that's gonna be it for me. This is Dr. Greg McLeod signing out, and I hope you have a great day. Peace and pips. Remember, comment below what you want me to cover next. Talk to you later. Peace.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!